Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on Tesla and want to talk about what signs we're going to look for to indicate a temporary top is being set. And I say temporary because we could just consolidate, form a daily high or low, or consolidate and form a weekly high or low and head to new all-time highs later in the year. So I'm not going to be looking for a top in Tesla. I'm going to be looking for a temporary top. So at this point, we obviously know Tesla's getting a ton of attention, running huge, and seeing big gains. A lot of people are making a lot of money bullish Tesla. That's great. I've been trading Tesla more in 2020 probably than any point combined in my other 9 years of trading. And just in the last 1 month and 3 days, it's my number one profit, and my number two most profitable ticker in 2020 is something like 1,000% plus lower. So Tesla's my horse for 2020 right now, and I'm trading it in both directions, short-term day trading it. I'll go over some of those day trades today. I was using the 1 minute time frame, just scalping it in both directions. But first, let's talk about the subject at hand. What is going to indicate a temporary top in Tesla? Just be aware that I am viewing Tesla the same as Bitcoin, the same as the marijuana sector. And you might be saying, well, it's completely different. Tesla is a company with this much potential and disruptor of the oil industry and blah, blah, blah. Yes, that's all true. But what is happening right now has more to do with human emotion and psychology than it has to do with the actual business of what's going on with Tesla. And that might not make sense to a lot of you, and you might disagree with that. Obviously, they're related. Obviously, the bullish reaction to earnings and the potential that Tesla has in the future has a lot to do with the short-term strength and dollar volume that we are seeing. But in terms of a 19% move after running this significantly and a weekly time frame that is going straight up, in my opinion, these moves all top out the same, and we call it a blow-off top. And it looked like one was close to forming today on the 1 minute time frame. When you see a move go up 5% on a major name where you're seeing billions of dollars traded, 5% in under 15 minutes, and then a 5% plus drop in under 15 minutes, this is what a volume climax and a blow-off top looks like in general. It's a huge surge up with just an insane run in a very short period of time, and at that point you clear out the order book. There is no real resistance because we're in blue sky breakout, so the price moves very easily with an influx of volume. We hit a climax, and then we pull back just as easily because there's no support established on the way up. This move on the way up cleared out the entire order book that allows for a complete 180 turnaround and significant pullback. So it happened on the 1 minute time frame, but from there, these lower lows got no bear follow through. And I started buying these bear breaks and flipping bullish, recognizing that and knowing that we were just looking for a 15-minute higher low to form after that climax top. If we were going to see bear follow through, we would need to see those lower lows get more bear follow through, or a 15-minute lower high and lower low into the end of the day to give us a big, ugly upper wick on the daily time frame. You look at the daily chart and say, well, isn't that climax volume? It's climax volume. It is not a climax candle. If this same volume had a close at $730 and we had a big upper wick, we'd be talking about a temporary top being set. That's not the case. The bulls held on. The bears didn't prove enough. And we're in a scenario right now where every gap up open that we see is just a perpetual short squeeze. You know, a lot of time you'll see a short squeeze that is on a name that's very bearish, and it then instantly just surprises bears and shoots up, squeezing a bunch of shorts. This is what I will coin. I don't know if perpetual short squeeze is a thing, but you heard it here first. Trademark. Perpetual short squeeze, where it's in a bull move and there is just no opportunity for shorts to ever cover. And obviously the close at the high is doing that. The gap up open this morning, first thing, did that. And if we gap up open tomorrow, anybody that entered bearish today is underwater. And I would say a lot of people entered bearish today. You don't pull back 6% plus and not see bears entering. That's obviously not just profit taking. It's profit taking in combination with bearish positions being entered. There will be short-term gains to be had as a bear on Tesla, but if you are trying to short this move, you are playing with fire. You have to have a ton of experience, and the only way that I would do it is how I did it today, which I will explain in just a little bit. So let's look at some previous examples of blow-off tops, and again, I know people are going to say this is different. There's always someone saying that this time it's different. For Bitcoin, this time it's different. We're changing the economic world with a new form of money. For the marijuana sector, this time it's different. It's a new sector that's being legalized and the floodgates are opening. For Tesla, this time it's different. We've got a disruption of the oil industry. We've got a new leader in the car making space and a revolutionary CEO. There's always a time it's different, but it always ends up the same. And again, I'm not talking big picture. Could Tesla be $2,000 in 2 years? Absolutely. I have no idea what the price will be in 2 years. I'm just looking for what the short-term top is going to look like, probably sometime this week, potentially even tomorrow. It would be a gap up open, a huge surge up, and then a complete 180 turnaround, giving back a significant amount of that move. Today, 5% up, 5% down did not do it. So maybe we need more than that. Maybe we need 10% up and 10% down. Let's look at some previous examples. Bitcoin, when the all-time high was hit on the daily time frame, and this is why it's so tricky to see these tops, because euphoria is so strong in people that have just been waking up every day to their accounts hitting huge amounts of profit, and they just think it's going to go up forever, and Tesla's going to run to $1,000, and maybe it will before we hit this temporary top. But again, they're going to be, the top is hit when you're looking the strongest, which is why it's so odd for people. And what I mean by that is, Tesla today, before that 5% pullback, it was literally the strongest it looked at any point today, the moment before that top was hit. And next thing you know, we're down 5% in under 15 minutes. That's what a temporary top looks like on a longer term time frame. So Bitcoin had two huge bullish days from 12,000 to 20,000 in 2 days. And then that marked a top where we pulled back significantly. Then we had a little bit of a double top and pulled back 50% in less than a week. But it was that short-term blow-off top, and CGC did the same thing. The strongest day that we had seen in months, a gap-up open. Next thing you know, we pull back 45% in just 2 weeks, and that marks the temporary top. So we get to a point where right now, supply of shares is being outweighed by demand for shares every day. Demand is higher, and that's why we keep going higher. We will get to a short-term point where there is nobody left to buy in the short term. Everybody that's going to bought has bought, and there's only going to be profit taking and people jumping in short. Right now, a lot of the continued buying pressure is this perpetual short squeeze, and every day a new round of shorts have to cover and buy higher. So that's helping things run, but when those scales tilt and demand for shares shrinks and supply increases as people take profit, it's just a game of musical chairs where when the music stops, everybody rushes to that exit at the same time real quick. And again, I'm not talking to everybody. There's going to be tons of people holding long-term positions, but I'm going to be looking for a very quick 20% pullback when the temporary top for Tesla is set. I don't mean 20% in one day. I mean perhaps 20% after a few days. Maybe that looks like tomorrow we gap up over $800, we run to $850 in the first 40 minutes of trading, and then we drop down to 780. Just like that, we're down 10% from the high, and then we bounce around a little bit, maybe an hourly lower high and lower low. Again, very rough example. One thing I'll never try to do is predict what price that top is going to be or when it's going to happen. But I know the signs that I'm looking for on a daily basis, and I will be looking to play Tesla bearish at some point when I get enough signals. So looking at how I played today bearish, I was using the 1 minute time frame, which I do not often trade with, but today definitely called for it because of the excessive move to the upside. And pretty much I didn't trade Tesla a bunch today until right here. And then I just turned on the jets, and I had probably one of my best trading days that I've ever had. Not necessarily in the dollar amount, but on Tesla trades, I ended up going something like 45 orders filled, and I ended up going 12 for 12 with 5 break even. So 17 total round trip trades, but I didn't lose, and they were both bullish and bearish. And I know some people might doubt that, but I know that members that are watching certainly believe me at this point. But looking at this, how did I enter bearish? So after this initial pullback, I said, I'm looking for a 1 minute equilibrium. I'm looking for our low, high, higher low is set. Now we got a bounce underway. I scaled in to this bounce attempt, looking for the 1 minute higher low. My initial entry was 7. I'm not going to have these numbers off the top of my head. I entered 2 positions. My first entry was a little bit too high, so I ended up with just a very small win exiting on this move. I recognized the declining bull volume, and I ended up taking a little bit of a short here as soon as this pivot started. And then at that point, I put my stop right above the top of that bounce. Because if I'm going to be wrong, I want to exit that trade real quick. And what I ended up doing is, as soon as a trade started going in my favor, I would fill out my sell order and I would put my break-even sell, and I would just be ready to click one button. And at that point, I would be gone. And if the bid and the ask started to creep back to my price, I would put in a break-even manual order. Why didn't I just set a stop loss and let it stand there? Because I was trying, all of my trades were less than a couple hundred seconds. They're 1 to 4 minutes long. And if I'm sitting there, putting a stop loss in and then changing my stop loss to a limit sell order, that's going to cost me seconds, and those seconds are valuable. So I have my order just ready for a button, and then as soon as the price starts going in my direction, I change my limit and sell with some profit. So I did enter bearish here and then covered on a flush down. And then on this bounce, I have a perfectly clear resistance to be playing off of. I say to myself, if we reject from 764.48, it's just a lower high. If we break that level, I want to stop out. So I entered another bearish position in the 761s here. I would have exited right when 764.48 broke. It didn't break. I held on a bit. I might have exited on this first little pullback, probably. Then we had a bear break with no follow through. So I start looking at the other time frames and I say, well, this 15-minute consolidation is still healthy. We're just looking for a 15-minute higher low to form here. An exponential 12-period support, which is my guide for a lot of consolidation pivots, is still holding. So at that point, as soon as that bear break saw no bear follow through, I started getting interested bullish. But that doesn't mean I'm not going to trade it bearish one more time, because we did the same thing with a notable 1 minute bounce. We had a clear resistance level of a lower high at 761. Anything under 761 is another lower high. So another little bear trade. We dropped down to a lower low, and then I entered bullish here as soon as 740 broke. And I entered bullish. I didn't like the way this bounce looked, and I took a break-even exit. And this is one of my 5 break-even trades where any slight movement that was not what I wanted to see, I would exit break even and not care if I missed any follow through. If we saw increasing bull volume and a more significant bounce, I would have kept that position. But the lack of bull volume and the look of the 1 minute bear flag made me exit break even, but I entered right back again on the lower low with no bear follow through. And knowing that I'm looking for a 15-minute higher low and a 15-minute equilibrium is the most likely scenario. So one more entry down here, and I didn't hold it as long as I should have. I sold into strength. I think I got in the 737s, and I sold it maybe low 750s. Nope, I sold it on this one move because we didn't change the 1 minute trend. We set the higher low, and then I did one more bull break here, entered that bull break, quick flip, exited, and then I entered at the end of the day. Last trade that I took today was looking for a strong close for the potential to squeeze shorts into tomorrow. Bears are doing what they can here after hours. Bulls have to show up pre-market. But I entered one more here at 668. I put my stop under 666 because I said, okay, we've got 22 minutes left in the trading day. If we're going to fail to break 775 and break 668, we are then in a 2 minute downtrend, and that's bulls losing their momentum into the end of the day, and I would no longer want to be in the trade. I was risking $3 of this Tesla move. We ended up going up to 783. That's a $15 move. That ended up being 5-to-1 reward versus risk. I exited 40% of my position right at the end of the day because I didn't want to swing as large of a position as I had. Not worth the risk for me. And then in extended hours, when Google gave us bearish earnings and SPY pulled back a little bit, I just said, all right, I'm not going to mess with this. I'm locking in all my profit. I will happily start tomorrow with a fresh, clean slate, knowing that I'm going to have volatility in both directions to do the same thing all over again. So that is my game plan for Tesla. I will trade Tesla in either direction, whatever is most clear. But the most important thing will be having clear levels nearby to be playing off of. The last thing I want to be doing is just scaling into a short because it's overextended. It can always run $100 more than we think it can in the short term. And if you are scaling in with no stop out level, things can get really ugly really fast. The only bearish plays in Tesla have to have a nearby clearly defined stop level. Otherwise, you are playing with fire. So that is where we stand in the short term. We will see what we get tomorrow. Bears are making a dent here in after hours. We're down about 2% from the close. And all that's going to do is just make it a little bit harder for bulls to try and start the morning strong. You could look at the other way and say, well, we're just cooling off hourly RSI in a very healthy manner. And all we need is the bulls to show up pre-market and see a gap up open like we saw today. And that's entirely possible. Look at after hours Friday and look at pre-market today, ensuring a gap up open. We pulled back in after hours $8 below where we closed. So it's all about where we stand pre-market and whether or not those bulls show up again to keep the pressure on bears. If we gap up open, obviously anybody that entered bearish today is in the red and will have to cover potentially over $800. Keep an eye out for a volume climax and a huge surge up and a quick 180 turnaround. And from that 180 turnaround, lower lows with bear follow through and bear volume will be the most important factor. So again, congrats to the bulls. They definitely deserve it. If I were in a longer term swing position, I would be walking up a stop loss on at least partial position. We didn't even consolidate on the hourly time frame today. So that's what's going on in after hours trading right now. Lots of fun, lots of opportunity. This is what I talk about when I say put the pedal to the metal and trade really aggressively. Today was my most active trading day and most dollar volume I've traded in a very long time because the opportunity was there. Pump the brakes when there's constricting, tightening ranges with limited opportunity. When those ranges open, wide open, and we see something like Tesla, that's when it's time to be aggressive. Not necessarily just going all in, but I just mean trading more often to take advantage of the opportunity of volatility. I guess I better give some verification after a claim of going 12 to 12. So here are my orders. I'm just blocking the order size, but this is short cover, long cover or close out, break even, long sell, end of day long, end of day sell. And that is just about half of them. So we'll see what we get. Stay protective. Things are going to get crazy. Volatility is not going anywhere. It's going to stay just as it has been, if not increase in the short term before we get that top. Thanks for watching.